Hi, it's David here with Futures Trading. I gave you guys a video roughly about 9 days ago. I told you that when they were pushing up, that there was a good chance that the market was not going to stay up. Again, the decline off of the high is different this time. All right, so there's a signature actually on the chart saying that there is some activity up there that there's a good chance we won't be back up there for a while. It's not to say that it cannot happen. I definitely said that in the last video, but I wanted to make sure that I make emphasis that there is a very good chance that it is not business as usual, from the bigger declines and then, of course, a new high. Want to make sure I show you some of the information that has taken place since the last video here. There's a lot of free content here for you. So if you're new, I suggest you definitely take your time here. All right, there's a lot of free content. This is how far the bar will pull back before it resumes. So the live candle, when it pulls back into your prior candle, this is how far it should go. And I'm going to show you what it looks like in real time. The price action trend, you just need to be able to count to 10 to accomplish this. All right. So you don't need any kind of indicators at all. The price action method, I use the majority principle to find where the stop need to be with regards to this method. All right. The chart scale, I teach you how to read your hard right edge and know that the market can turn right within frame without you having to look hindsight. So you don't have to look left. You can trade that hard right edge. And I'm going to show you how that looks as well. All right. So before we do this, I want to say thank you to Brad. Of course, he's a part of the private community. So if you're in need of more additional information than what's covered here, I'll show you what that looks like. Brad, we celebrate you. Of course, I've said that in, of course, the last video in the private community, but I want to say it here as well. He passed 3 prop accounts in 1 week. All right, 3 prop accounts. Santiago, thank you so much, my friend, again, for leaving a comment here. You guys are definitely awesome, and I appreciate the support. That's the reason why I left before, but I definitely appreciate you guys stepping up and sharing your experience. You were able to get your bills paid for a month using the trend and the trend distance, and I am going to show you guys what that looks like. Thank you for all of the likes, those that have supported the information. Again, that's the whole reason why I took a sabbatical from the channel, because I'm trying to definitely give you guys some useful information and full context from the chart all the way into the live candle, something that you really need. If you are in the market for additional information, all right, this is what it looks like. I took a past prop account, all right, live prop account there, and use one contract to get a goal met. In each lesson, all right, so there's roughly 10 hours there. And in each lesson, I lost over $1,000 and was able to go back with one contract and recover the thousand and meet the goal. In one of the lessons, I actually lost the goal 3 times and still managed to get it, and of course, satisfy the requirement there. A lot of useful information. The last video that I did here, though, I gave them some information about the smaller body bars and how to interact with that. All right, now just take a look at that chart in this frame. I'm going to show you what that looks like, and that was back here. All right, so let's get this in frame. I'm going to show you guys what that is. We cover information that's, I mean, again, that should sustain a trader. If you want to actually last in this business, I try to give you information that can get that done. Not only free, of course, definitely once you elect to be a part of the community. All right, so should you choose that path, I want to show you something. So this is that chart in that video. The video had ended. The private community know this. I had put that zone down there in that video and said that there's a professional signature here. All right. And of course, we ended the video roughly about here. All right. So, and they've been up ever since. All right. They've been up ever since. They haven't come back. And we're going to look at that daily. And then we're going to come back and look at our chart from this morning. So this is this morning's activity. And I'm going to go over all of that useful information in real time, so that way you can get a feel for how that works. But yeah, we marked that 2 days ago, that low. All right, so again, if you need that information, you're more than welcome to it. And again, just email me and the information will be below the video for you to do so. That zone is here, so we put that zone here. It was about 12, I want to say 12:40 something that day when I ended the video. So midday, we put that zone in that video. All right. And I told them that yes, they're on that bottom. All right, and they've been up for days. And I even told them that they should get up here to this bar. Okay, so they made it here. The threshold of the bar is universal. It's universal. And again, we actually was on this bar here in the video on the channel. So the last video I shot 9 days ago, let's go here so you can know for yourself and kind of follow along, because I want to make sure that you guys are getting some useful information here on YouTube. That video here, do forgive the noise in the background. This video here 9 days ago. All right, so that's this information here. We were here on the 23rd. All right, so we're here on the 23rd on this green bar, and I did tell you guys that there's a chance that they would move higher. However, they would decline again. And I, of course, gave you guys the target, and I'll just bring you up to speed. There's a good chance that this market is not going to see a new high. It's not. So here are the targets. Again, if you didn't catch the last video, here they are. Okay. And I absolutely believe that they're going through this low. All right. So I believe they're going through this low. They're just kind of popping up right now. I don't believe that they'll stay up. I don't believe that. Uh, if they decide to not go through that low, uh, and they can get back past here, which I doubt, you should be able to see them up here. However, if not, they're definitely coming down here to this 15.5 here. All right, so we're going to track that. And again, as they get there, I'll let you know. But currently, the threshold, the universal threshold of this bar, and I said it in the private lesson there, that they would end up here when I drew that zone on that bar here. So when I drew the zone on this bar, a couple days ago here, I did tell them that they could end up at this bar here inside of this threshold. There's a good chance that that was going to happen. We're using some, again, some simple information, understanding the signature of professional activity. We're using some simple information, primarily this, just to pull those zones off to know that they're there. We're using some simple information, again, very robust. I hope that you guys have been benefiting from the last video that I've done, or those that has been on the channel for a bit. They pulled into this threshold here. And again, it's universal. It's on every bar. You can see the low of that daily bar. And again, that zone is made that day. And then, of course, they came back today. And there's that threshold here. You do get a market analyzer should you purchase the indicator suite. You can just get the indicators for 200 bucks. It's there for you. You don't have to be a part of the community. That's a little bit more of a commitment. But if you want the indicator suite, there's tons of price action indicators in there. Some real-time indicators too that flash and tell you sell pressure, buy pressure, arrows that flash. There's a lot of stuff in there. Just a lot of stuff. And you can have all of them. You're paying significantly less than $1 per indicator. That's how many of them I've created just to give away to traders that need help. One of the indicators, I'll say this, I paid over $300. Well, I'm sorry, to over 200 and some odd dollars for just one of the indicators in the indicator list. And I've managed to tweak it just a bit. And of course, just for the functionality of it. Okay, just the functionality of it, I had to pay over 200 and some dollars. And so I tweaked it to my liking. And of course, I'm giving that away as well. So you're getting a ton of other indicators along with that one for 200 bucks. So I'm trying to really provide traders something that they can use, and you don't have to have a machine ID. Okay, so there's no strings attached. I don't have to approve your usage of the indicators. You can use it as many times as you want on any machine that you would like to. And you will receive templates, this market analyzer, which is really important because it has the pivot range high as well as the low, and then today's pivot range high as well as the low inside of the market analyzer, so you can kind of know what your levels are, kind of moving into the next day. And so that's kind of useful. All right, so now let's go over this trend and trend distance stuff. Let's go over the four components to give you guys a chance to see how all of that works. All right, so we got another trend up here. All right, so we can just open this up just a bit. But before doing so, let's do this. Let's divide our chart. And again, this is that threshold of that bar, that bar that they pulled into. I'm gonna kind of compress this so you can see how they kind of use that threshold there. That's that second zone. The first zone was a little further back. All right, so I'm gonna give you that information. Again, those levels was there when I drew this zone here, and that those levels was there, and we ended the video there. And of course, they moved up to it, kind of fell off the first universal threshold. They fell off that lower part there, kind of got stuck in between, and this is where they're at today. All right, so you can use that information to your advantage. Let me open this up, and we're going to talk about that chart scale, that hard right edge. I'm going to do this really quickly. I won't be before you long. Just want to give you an opportunity to learn some information that's useful. And if you like the content, support it. Definitely do that because there's traders that need help. You don't want to spend too much time doing this, I must say, because then you develop bad habits. All right, so I want to give you some habits that you can use and it can be useful moving forward. Center of your chart here, lower portion of your chart here, give or take. I'm going to give or take here, people. Lower portion of your chart is roughly here. And then the upper part of your chart, let's go give or take right about here. All right, so right about there, give or take now. All right, so let me just kind of drag this up just a hair. All right, so let's see if they can just stay above the center, lower half of the chart. Let's see if we can stay above the lower half of the chart, but yet below the center, and see how they behave right in this area here. I might dial down to a 15-second chart to give you a little bit more information for brevity's sake. All right, so we got 1, 2, 3, 4, 5, 6. That's 7. All right, so let's draw our trend. We're gonna make it simple. We'll probably flip between the two, the 15-second in here. So let's go here. That's 1, 2, 3, 4, 5, 6, 7. They all have to close higher. Bullish bars closing higher. That's the only caveat. I'm not gonna worry about coloring the arrows here. We're just gonna throw this up here. And here's the center of that trend, the cost of the thought. Because whenever you have an idea, you have the end in mind. So you think of the outcome, okay? How to get there? Well, you work that out as you go, but you actually have the end in mind. And so it's important that you know what the trend is so it can tell you how far it planned to go. So the market actually tells you how far it plans to go. All right, so let's go here, just measure this. Okay, it's like us. This is a decision place. I tell everyone that this is a decision place. So if they're going to go up, they should go to roughly there. All right, so that's roughly at the center of the chart. Now, either you can do it with it, coming back towards you, or you can go from right here. It's kind of one and the same, right? But this is suggesting that they'll get back up here. Can it turn back around and decline back down? Yes, it absolutely can. But right now, as it's stated, there's a trend here. So as the market begin to move down, okay, you don't see a trend in any of this. You would just stay in the trade. All right, and there's your trend there. Do you have to stay in the trade until the trend show up? No, you take whatever it is that's suggested. Okay, so we get the no touch scenario, and there's the indicator for it, the color. I have levels, text, pressures for it. So if the scenario should happen, you'll see the pressures fire off. And all we're doing is we're getting the mid of this bar to fall below that low, and the pressures will come on. Here, this mid fell beneath that bar's low. You can do this in real time. Once it happens, you'll see the pressure comes on. There, it's happening. And so this bar should turn red. And so what you would do, you would try, I'm gonna just give it an estimation here. You would try to go for the distance of this when that bar closes. So when the live bar closes, that's saying that they could possibly get here. And so that's what you would be doing. So if you can't get the trend distance to stay in it, if you can't stay in it, because I know prop accounts like to draw down on you. So if it go a particular distance and come back, you lose the opportunity of having the capital that you had before. And so you would take the distance here. And of course, this is the majority principle. You take that distance and you project it. Okay. And it made it. All right. So the bar turned red. This is the stop bar. Okay. This is the stop bar. You do not let the market come back past this bar. And, of course, you still stand in it and holding it. You don't do that. That's the stop bar. Okay. So you don't want them coming back past your stop. All right. This was that same pattern. They pulled up to it. Okay. And it suggested. Okay, now this is just the market suggesting to you what's on its mind. It hasn't gotten there yet, but over halfway is pretty good. All right, so let's see, can it make it to either this one here or down here? Keep track of the activity though. Okay, so make sure we do that. Again, the market is actually let's see what it's doing here. Okay, I thought it was I thought it was pausing for a second. We have one, we have two, we have three, we have four. What is the close here? You can look in the upper left hand corner here to see that close. We have four. We got to see, did it close lower? All right, so that's 673.75. What do we got? 673.75. So no, that's even. So we got one, two, three. That's four. We need seven back down. All right. Now, if there's not a seven down, it should turn back around and commence to getting here. It can't stay in this area forever. All right, so that's something I want you to know. While that's developing, let's go take a look at 9:30. All right, let's take a look at how it progressed to the upside. All right, just really quickly here, and then we'll take another look. All right, so let's see. It's seven off the bottom. Right, they have to close higher. Okay, there's your seven. You take the distance. Okay, remember this is a decision play. So whenever you make a decision, you have primary and secondary value. So there's the primary thing that you really want to do. Oftentimes, right around the center of the trend or the cost of the thought, you have to evaluate what it's worth to you. Here, they didn't spend any time. So it was pretty much established fairly early on that they actually want to be up here. So now let's just throw this here. I believe they made it, but I want you to see it. Out of all of that stalling, acting as if it don't want to go, it made it. So it made it here. All right, so that's something that's important. Now, when it comes to it having made it, when it comes to it having made it here, of course it can rotate. And you can see here when it made the trend, it could rotate, it could pause just a bit. All right, when it got up here, it made another trend down, and so commit to doing the same. You just count the bars. They all have to be closing lower than the prior, and then project that distance. All right, and as you can clearly see, they got between the threshold here, our universal threshold from that daily bar. They made another trend back in this direction. All right, now all of the green and red bars is the majority principle. All right, so all of the, I want you to pay attention to that. All of the green and red bars is the majority principle being played out on the chart. All right, so that those are stops. So everywhere you're seeing the green bar, even if it's red with the green opacity, that is a stop bar. Okay, and so you could stay in the trade potentially until here. Okay, till here, because that's when they made the downtrend. If you would like, get back in it once they make the uptrend again and hold it yet again, because yes, they made that distance as well. All right, so they made that distance as well. Let's go back, and of course there's your downtrend off of that high. Let's see what we have going on here. So they pulled into the threshold of our red bar. So this is our red bar, the two black lines on the candle. So the two black lines on the candle, they pulled into our threshold. This is a universal threshold. This is how far you expect the bar to pull back. Well, the live candle to pull back, or subsequent candles to pull back before it resumes. All right. They kind of did a little bit too much on this one. All right. They pulled into it, and of course, they just didn't break our stop. All right. Now, again, I'm telling you what's universal. There's clearly far more information that I know, about markets than what I'm disclosing currently. So I'm just telling you what you can potentially get. They're doing it again. There's that distance there. Let's count our bars because they're closing lower. So we want to keep track of that as well. Now, because they're doing it, you can, again, project that distance as well. Okay, so let's do that too. And that's suggesting a move even lower to here. All right, that's suggesting there's another move lower to here. All right, and there's two stops here, so you can actually bring it down. Okay, from of course here to here. All right, and you just try to stay in it and see, can they make that distance there We already know that they had made this and they just kind of, lifted up, which the market does that. Don't get intimidated, don't be bothered by it. That's how the market moves. It's cyclical. And then of course you just wait until they get here, given that they don't hit the stop. So you don't want to allow the market to just run against you. All right, don't do that. It's best that you exit, take another reentry. Is suggesting that they're going to do it again. The pressure is coming on. And again, I have several different real-time indicators that you can use, but this is particular to this universal concept. All right. And of course, you can make the pressures as big as you want. I have them where you can put them at different places in the chart. That's saying that they can go here. Okay. So now that's saying that they'll end up back through this bottom. You can put them in different locations. You can put them on the left, the right, of course, the center. You can run those pressures in different places. The the universal approach again can be applied to any market, any time frame. That's what we did on the daily. All right, so let's just take a quick peek at our daily. It's on the daily as well. All right, so let's slide this out the way while that trades. All right, we don't want to make this complicated. We had a red bar up here when this bar's mid fell beneath that bar's low. Okay, now I do know that there's an uptrend here because we counted 5 when I shot the last video. And I even told you that they could make the uptrend, and I still believe that they would turn back around and they would head lower. All right. And in my private community, again, we did it from here and said that they should get up here. All right. So we're keeping track of this in the private community as well. I did tell the private community that I will probably be delivering targets publicly. All right. So you'll get a chance to benefit from some of the content that I plan to cover. Not the educational side, but some of the targets. All right. So I want to give you a chance to get some of that going. Definitely those that supporting the content. All right. So, and again, you can see all of the red and green bars on this daily chart. Those are stops. And if you're a swing trader, and again, it can be applied to anything. This is the 1 minute. All right. So this is your 1 minute. And yes, they're back down. So what you would do is same thing. You would take the distance. Now notice they stay beneath the center of the chart. Okay, they stay beneath the center of your chart. They was just above the lower half, the upper part of the lower half of the chart, but they just again need to get above here, and that's something that I also stated in the video 9 days ago when I presented the daily, that you would need to get them above the center of the chart. You would need to get them above the center of the chart, and they were unable to make it. All right, so we're using universal concepts that's simple. All right, so now we got to count our bars: 1, 2, 3, 4, 5, 6, and that's 7. So we got 7 here. Okay, so now what we're going to do is we're going to take that same idea. The end is present with the thought. Okay, remember that. So when you think of something, the end is present with the idea. So you know how far you would want to go. Okay, you know where you want to go. So the market isn't random. Everyone that's here is exercising decisions, and I want you to see the decisions that's being made on the chart. I want you to see it. Okay, I want you to see that. Now, this one wouldn't have worked. All right, so this is the unfortunate part. Okay, so this one wouldn't have worked. Okay, that wouldn't have worked. They would have gotten past that. Again, this is the ability to trail it. Now we're getting a buy here. We're in a downtrend. All right, but it's telling you that it's a opportunity. Okay, now there's things that I tell you about pullbacks, reversals. There's criteria to everything. All right, I'm telling you what's needed for free to get you where you would want to go. That's suggesting that they'll get back up here. I don't know about that. It's not to say that it can't happen, but I don't know about that. I don't know, but you would have an opportunity to possibly trail it. Let's see, did they break this low? I don't think they did. What's this low here? Low 0475. What's this low here? 05. So no, they didn't break it, and they just pulled into it. They're getting roughly about halfway there, but I don't know if they'll be able to make it. I don't know, but that's saying that they can get there, and so you would project that. And again, this is a decision place. That's what's being done here. It's just choices, and so to better see the chart, you need to look at it indicative of what it is that you're already familiar with. You're familiar with making choices. So when you look at the chart, understand the chart is identical to you. It's choices that's being made on various different price levels. Supply and demand is happening on every price level. The end is present with the thought. Okay, I want to say that to you. The end is present with the thought. So when you get an idea, you know what that idea is worth to you, and the market performs the same. All right, so I don't want to hold you any longer. I absolutely wish you all the best with your trading. Take care.